Welcome back, guys. You're with us here on Editors Roundtable. Now, one of the things which we've been debating earlier on was whether this pullback that we have going, which is worth 10% now over the last 5 sessions, is a bear market rally, a counter-trend rally, or is this the start of something new? The point is when markets rally 10%, in the midst of that move, it's very difficult to determine what kind of a move this is. We're all only wiser in hindsight. But what we can do is look at history, and I think you can go back all the way to 2008-9, or you can go back to the 99-2000 episode. But I thought, well, the GFC, the global financial crisis of 2008-9, perhaps is not an exact comparison, but you could maybe glean something from this data. What this is this is nothing but this is Nifty and what it did between January of 2008 and March of 2009. It started at 6,287 and it ended at 2,573 in March of 2009. That was the absolute bottom of the global financial crisis. The point of this is to illustrate the number of bounce backs that we had. You started early on with a 28% cut. It took about 48 days. Then you got a 16% pullback over the course of 29 days. Then you got another 27% pullback. Which lasted 52 days. Then you got a 21% pullback. Then you got a 45% sort of downtick, 25% pullback, and then finally, 18% drop, which took you to that low on the 9th of March 2009, which was 2,573. I mean, if you wanted to go by this kind of template, you are probably in in the fourth stage, which is that 21% pullback, which you saw between July 2008 and August 2008. Just to make things clear, this is not 2008, 2009. This is not a systemic crisis that we saw back then. Banks were failing back then. The market decline was much larger. High to low, the market fell 60%. This time, the fall has not been 20%. I mean, we stopped short of the 20% mark, high to low. So this by no sort of a comparison is a global financial crisis, and we're not trying to say that you will eventually have a fall of that magnitude. It's just to say that when you have markets turning south, you also get sharp pullbacks along the way, which one has to be which one has to read correctly without jumping in and saying that, well, it's all clear and we've already started a big new bull market. It's possible, but as I said, there is no way to know when you're in it. Ajay Srivastava is with us, someone who's seen many of these cycles. He's, of course, with Dimensions Consulting. Ajay, great to have you with us here. Thanks very much.
Thank you.
What's your own sense, Ajay? What kind of a move are we seeing? It's 10% off the lows.
See, I think one of the critical thing is, I would say it's certainly a relief rally, and which is coming out of the fact that the selling has kind of slowed down for the big sellers, which lent that even small buying in the market, and Indian markets do need to buy because we have the mutual fund, we get money every month. So even a small buying can just take the market up. The amplitude of this small buying is far more because the market is very shallow at this point of time. If you see the volumes, they are about what, 30-40%, less than 30% of what they used to be last year. So in a shallow market, the selling has stopped. Little bit of buying is showing clear amplitude in terms of the impact on the market. Number two is, I think your analysis is very good, absolutely beautiful analysis. The only big change has happened, Prashant, since 2008. The central banks started to intervene very actively to protect the market, to give liquidity, to came in with, and we're paying the price for it. Obviously, the inflation is a virtue of that, but we're paying a price. But the fact is, central banks have taken a very clear view from 2008 onwards that we need to protect financial market. And when they say protect financial market, they mean to say protect the borrowers at that point of time. So when we buy into this rally or we invest our money, we must be cognizant that the financial system is geared to support the buyers in a big way compared to maybe 2008 and preceding that era. Therefore, to that extent, there is some safety that they will do what it takes at the end of the day to see that the companies, the financial institutions are protected, and therefore your investments remain a little more safe and secure. Having said that, it's a good thing to tell people also that FOMO is dead. You'll always get a chance to buy stock. Do not go really haywire when the market is up 20-30% and you start to buy the stock. Right. Behave like the private equity guys who do one critical thing. They sell their holding at some point of time. Problem with investment in India is people don't sell. So point-to-point returns is absolutely pathetic. Actually, if you look at mutual fund, It's a very sad story of Indian investors. They don't make money. So I guess the answer to your question is, investment-wise, whether it's a bear rally or a bull rally, a rally is a rally, but sell if you think you made profits and the share P expansion is taking place and earnings are not expanding in the company.
Okay, you know, Ajay, when you said do what PE investors do one thing right, I thought you meant taking a lot of holidays because that's what they do, right? Especially after they make a lot of money.
That's what Ajay does.
That's what Ajay
Oh,
does.
God.
I guess. Okay, now, but Ajay, one space which clearly showed signs of being in a bull market even before this week was consumption, and that includes, by the way, one of your favorite names, right? PVR. I mean, the consumption index is almost at new high, and so many stocks doing well. Autos, the FMCG names, some of the restaurant stocks, the exhibition stocks. What's happening here to your mind?
I think, this is a classic product of a K-shaped rally where the better part of the economy is doing reasonably well. They haven't been hurt by what's happened to the market. And, let's say exhibition business is a different stuff because the story has changed there. You literally have a monopoly sitting on an Indian exhibition market where also now we realize that it's not Hindi movies which drive this market. It's a Southern movie which drove this market. So look at the expansion, what has happened in the software. I think that story will play out. It's not today. It's going to play out for the next 5 to 10 years as far as investors is concerned. But in the other parts of the segment, it's just the fact that the consumption space, as I said, belongs to the people who are rich, the top 5-10% of India who are still able to consume these products. And they have come back to the market with a vengeance. They have been spending money, but also what has happened? They're reallocating their budgets. If you look at it, what's happened? The apparel space has lost a lot of traction because the movement from men's, at least, clothes. Sonia, you'll agree with that. Women's clothes has shown still traction, but men's clothes has become a disaster. Absolutely. So
we were just talking about, Ajay, we were just talking about how everyone here needs a wardrobe, change right now. So I take your point. And
thank God Ajay is wearing a jacket, because otherwise, it will look like both me and Ajay went to the same shop and bought
it on sale.
I didn't notice that. That's true.
But Ajay, one sec, before you move forward, since Anuj was asking about exhibition companies, and since for your your love for PVR, I hope as a tribute to them, you're going and watching Shamshera this weekend. Please tell me.
Is that the recommended movie? Is that the recommended movie for the week?
It's apparently bombing at the box office. It's not doing well, but you love PVR, right? So you got to do it.
I'll watch Top Gun again. I can watch it anytime, though.
Oh, yeah.
To my contribution. And I really am going to actually make a call to Ajay and tell him why we're taking it off IMAX, because so many people still want to watch that movie. It's incredible how, people are watching not once. When you said consumption, people are watching it again and again, the same movie. It's an incredible story. So I think, and that's what it's all about, that 5 to 10% of India is doing well. It's earning, it's spending. So those companies who are on a K-shaped recovery model are doing well. We need to still worry about the rest of India. But since you asked the question, that's what is happening. And number two, most important, Hindustan Liver has shown how to pass the cost on. It's beautiful. If you look at the commentary, look at the financials, it's absolutely fantastic. They've been able to pass the cost on, still kept the volumes where it is. It's not that the volumes dropped. So both ITC and Hindustan Liver stories have been past the cost, but still managed to keep the volume. So the small guy lost. Remember, there's the somebody lost in the system, and that was the small companies who were catering.
Yeah, Ajay, but what do you do with these companies from here on, particularly ITC and HUL? At around 2,000, 2,100, there was not so much of a buzz in terms of HUL. Or ITC as well, it was, just in that range, 200, 220 odd. Now they have moved up, considerably. What do you do from here?
These are stocks which you really keep it for a longer period, and they have demonstrated now. ITC, of course, there have been various memes, and I don't want to be unfair to them, but they've done a miserable job of shareholder returns so far. Yes, the share price has gone up for 200 to 300 in this last couple of months, and it is great that they'll do some restructuring. But the fact is that the DNA of the company has not been rewarding to the shareholders on a look at a 5, 10, 20 year, any perspective you want to look at it. HUL, on the other hand, is a dividend play, because the only trip in life, if you look at what they've done, 90% of their money they pay as dividend. So, so the tax cuts that the government gave them. Sorry?
Yeah, go ahead.
So, so HUL and other people are the people who are going to reward the shareholders. They're not going to waste their money. It's going to go back to the headquarters. You will get as investors. So if you want a clear play where dividend yield is not good, but at least the money keeps coming back so you don't take the risk. And number two is Indian economy is now geared only for the large companies. So if you are putting your money in the small caps in these segments, I think they're not going to go anywhere in a hurry at these companies. So therefore, reallocate the money out. If you really want to be an FMCG, you better be the big guys, because now they will rule this the market as such.
Okay.
Thanks a lot. I'm watching this one, Top Gun, this weekend, by the way.
Okay.
I'd missed out watching
Ajay
this.
told us he watched it 3 times.
Yes.
I'm going tomorrow as well. We're going to take my daughter. She's not watched it. All of us have.
It's going to be a good one. Yeah, it's a good
So
one.
I need to get a commission from PVR.
You're already getting dividend. Be happy with that.
Oh, yes. And it's a great story. I think it's a great story for the Indian economy. It's a great story, if you ask me personally.
All right, Ajay, always a pleasure. Have a great weekend.
Thank you very much.
Kept our spirits
You have a
high,
great
the market
weekend.
spirits high as well. Thanks a lot for joining in. With that, it is a wrap on this edition of Editors Roundtable. You folks have a great weekend. Thanks for watching.